So good evening, everyone, and welcome back to the Helen's Daughters Ag-cademy. My name is Keithlyn Karu Afrifa, and I am the Executive Director of Helen's Daughters. And it's really wonderful to have all of you here again for our second session in the Financial Literacy series. This module is all about financial empowerment, helping you as women in agriculture to better understand how money works, how to manage it, and most importantly, how to grow it. In your first session, you explored the basics of financial management with the amazing Miss Davy Daniel. And tonight we'll be focusing on how to access credit and funding from loans and grants to other financial opportunities available to small farmers and agripreneurs. You've heard lots about Davy, and we're so pleased to have her once again. Davy is a financial professional with extensive experience in small business financing and entrepreneurship development. She has worked closely with entrepreneurs and community groups to help them navigate financial systems, access funding, and build sustainable ventures. And we're, of course, in such great hands tonight. Before we begin, though, just a few housekeeping notes. This is a Zoom webinar. If you would like to ask a question or share a comment, for questions, please use either the raised hand feature, which you can find below, or type it into the Q&A box. For comments, I have opened up the webinar chat as well, but let's focus on the session. And finally, this is an interactive space. Ms. Daniel will always open up for questions and so forth, so just have some patience when she opens up for questions and allow me to unmute you if you do want to speak instead of asking a question in the chat. But once again, don't hesitate to engage and share your own experiences. So tonight's conversation is really about making access to finance less intimidating, understanding where to start, who to talk to, and how to position yourself to succeed. With that in mind, let's dive into our topic. Ms. Danielle, over to you.
I always get such a lovely introductions. Thank you, Keithlyn. Thank you to everybody and welcome again. I hope you all enjoyed last week's session. Tonight is one of my favorite parts of the program. As we go through tonight, there's a lot to unpack. I will give opportunities to speak, and as you all can tell already, I'm quite interactive and I like to be able to communicate. Unfortunately, I'm not on camera tonight, but hopefully the last session we can get back there. So let's just start right away. Keithlyn had her house rules, I have mine. So let me just go through mine with you. I will guide you through the presentation. I will leave enough time at the end for discussions and questions, but throughout there will be points where I would love you to interact. You raise your hand or you type a message and I will see what I can answer. If not, I'll leave it for the end. Understanding finances can be challenging, and we all come from diverse backgrounds with varying degrees of familiarity. So please, let's be supportive and respect it towards each other's experiences and questions. You might wonder why I repeat that, but that's important that we all know that we are in a safe space. Questions and clarifications. If something isn't clear or you need further explanation during the presentation, just raise your hand. I'll do my best to answer immediately. If it requires more detailed response, I will note it down and get back to you later. Privacy. Should you need to share any personal or sensitive information, I encourage you to do that through a private message, especially if you want to maintain your confidentiality. Let's use this opportunity to learn, support, and empower each other. Each question or insight enriches our collective understanding. At the end of tonight, I will provide you with some details as how to reach me for any additional resources or further assistance I might be able to give you. Thanks for your attention, and let's have a very productive session. Focus on empowering all of us, including myself, through improved financial literacy. So welcome. Welcome again. Keithlyn gave a really good introduction, so I'll keep that short. Tonight, we'll be looking at access to credit and finance, what credit union and banks look for, what are the challenges, particularly for rural women in agriculture. We'll look at banks versus credit unions, grants, digital lending platforms. We look at barriers faced by women in accessing agriculture. We look at what's good debt versus bad debt. I want to touch a little on predatory lending. We look at strategic tools to improve your loan approval. So I will basically give you some insight as to what to look for if you're looking for funding and what questions you should ask. I want to focus as well or bring to your attention two scenarios which I'm hoping will help you understand. I understand I will not be able to take everybody's perspective, so I chose to do it that way to be able to give everybody a little something. I want to look at, often we always identify problems and they're not often solutions. So I want us to look at some solutions and how we can advocate for those solutions. I will recommend some resources for you. And finally, I don't think in St. Vincent and in St. Kitts, I'm not sure when last year had elections, but in St. Lucia at the moment, we're in silly season. So I want to see if you can use some of what you've learned today to be able to call your representatives to action. Because really, at the end of the day, no matter what we say or do, the power is in their hands to make the changes. So hopefully I can empower you with a little bit to be able to do that. And for tonight, I just want you to remember as we go through this presentation, access to financing and financing in particular is not a privilege. It should be a right for women who work every single day to feed and grow their families. So let's think about that as we go through this evening. As anything else, I try and recap the session before because everything ties neatly into each other. Last week, it wasn't last week actually, yeah, so much has happened. Between Tuesday and now, it feels like I've had a week. Sorry about that. Let's look at what we discussed on Tuesday. We looked at why financial literacy matters. I know it sounds like a complicated academic thing. It really isn't. Why do we need to be financially literate? Just like when you went to school, you need to learn to read and write. I believe financial literacy is equally as important. It's not something that's taught to us from a young age. And for those of you who are young parents here, I hope you take on board some of what you will learn and impact it on your children so that the mistakes that you made or the knowledge that you did not have, they will have it sooner than you and perhaps make better and wiser decisions. Not that I'm saying you haven't made good decisions. Understanding financial planning, we looked at things like budgets, goal setting, how planning allows you to move from surviving to strategic living. Effective money management. We looked at budgeting, setting priorities, tools to use to make every dollar count. We looked at credit, how credit can build us or break us. We examined types of credit, interest, and the hidden costs in most of the credits. Savings with intention. We shifted the mindset from savings what is left over to saving for a purpose. Borrowing smartly. I think we touched on lightly about banks versus credit unions and discussed a little bit about how to avoid high interest rate loans. We looked at life events and financial protection. Surprisingly, I was quite surprised that so many people were interested in health insurance. But we spoke about insurance and making a will to protect your hard work in the future. We looked at recognizing financial abuse, and I sincerely hope that none of you are experiencing or the signs of this within yourself, your family, or anybody you know. But I also shared some resources that if you do need help, you know who to contact. We looked at basic investments, how to start small, and how to look for steps to be able to invest to fuel your future and for stability. We looked at self-assessment and action planning. So I had sent you a worksheet that I wanted you to look at. Can you just by a show of hand tell me how many people actually filled it out? It would be nice to know if you all even looked at it, so I will know whether or not to send more resources for you all. So let me know if you all looked at it, if you were, and in the chat group, let me know, were you surprised? Are you happy with with the outcome, would you like help in improving? So just type something quickly. I'll have a look at it to let me know what you thought about the planning. So we achieved all this together, right? So the goal is not to be rich. The goal really is to be financially free, or rather have financial freedom, to be financially secure, and most importantly, to be in control of your finances. Okay? So today we will deepen the work we started by exploring real pathways to financing for those of you with businesses, business growth, because some of the things you'll take over, this is what is going to happen. And you deserve to feel confident with your money. Every step you take, no matter how small, is your path to independence. So let's start with a little bit of statistics. I'm trying not to bore you, but rural women across the Caribbean are not a small segment. They are a critical economic engine supporting both home and national food systems. Women represent 50 to 55% of the Caribbean population, depending on the island, but that's average. Over 40% of women in rural areas engage in agriculture, fisheries, or other related cottage industries. They are also primary caretakers responsible for children, the elderly, and household management. Many of them are sole and primary breadwinners, especially in female-held households. And as we know, female-held households are quite common in the Caribbean. I grew up my grandmother was the head of our household, and I'm sure many of you have that experience where you grow up in blended or extended families, and most times it's a woman at the head of it. So as it pertains to entrepreneurship and workforce participation, women make up over 40% of small and micro businesses, small, micro, and medium businesses in the entire Caribbean region. The businesses are largely informal. When I say informal, I speak about roadside vendors, possibly juice makers. So it's basically like a hustle. You're on a hustle, right? And that makes you less visible to financial institutions, less likely to qualify for loans or grants, but it makes you more vulnerable to climate, income disruptions, illness. And that's what most of the time the financial institutions don't consider, right? Women often have equal or higher educational attainments than men, especially in secondary and tertiary levels. And I am sure that's evident in many of you who are here today, who may be farmers. And generally, people look down on you thinking, oh, she didn't go to school or she didn't do well at school. And I know for a fact that many of us did extremely well at school. And some of us are doing this by choice. Some of us are doing it because of circumstances, but yet still, we don't get the credit for doing it because it is deemed as a menial task. I want to remind you here as I say that feeding your family or the nation can never be a menial task. So I went off track a little bit, but skills gained whilst you're doing this informal work. Many of us or many people who are in the traditional work environment never get to gain those skills, right? Your competencies in trade, in production, in management, they are often undervalued and unfinanced, right? When we look at financial inclusion, rural women, particularly women involved in agricultural businesses, are less likely to have bank accounts. Now listen well, bank accounts. Many of you will have credit union accounts, and I'm sure there's a large percentage that have banks because banks are becoming more available. But in the rural communities, there aren't banks. It's mostly credit unions. So you'll find in certain areas, in towns and villages, you might have one bank or one, but there will be one or two credit unions in every community. So what I'm saying is that most rural women, I shouldn't say you, would not have bank accounts. You'd have which would be the cause for limited access to physical financial services. These women are also considered to have low and inconsistent documentation of their income. So, for instance, if you worked with an organization, you would probably get your pay slip. You would know how many hours you work. But when you're a hustler on the side of the road selling coconut water or juice, where and how do you document your income? And these are the things that the banks look for. Women in financial one of the things that would exclude you from the traditional lending criterias or financial exclusion would be a lack of collateral. And later this evening, I would share with you something about collateral as it pertains to the courts. But it would be lack of collaterals because generally women in those positions don't own land. They have access to nothing that the banks, and I put that in inverted commas, would consider of value that they can hold as collateral. Only a small fraction have access to credit beyond the informal borrowing networks, right? So many of those women or many of us would participate in SUSUs. We would borrow from families or we would go to loan shacks because that is the easiest way to get or quickest way to get access to be able to do something for ourselves. There is also structural barriers, and that includes gender and cultural biases in lending and business recognition. I will speak a bit more about that to you later. Time poverty, dual roles in agriculture and caregiving, legal and administrative hurdles. So most people in those situations aren't able to afford legal advice. They aren't able to get over some of the registration and compliance issues surrounding the more formal setting to be able to allow themselves to get access to those funds. Mobility issues, especially on islands where services are centralized. So, for instance, a lot of things are happening in the cities, but resources available to you if you live in a community like Bhutan or maybe somewhere in Bellevue. These are the things that would affect your access to lending. One other thing about Caribbean women, their strengths and their potential highly underrated. Caribbean women, and I have lived in 2 continents, I believe, yes. And if there's one thing I can tell you, we are highly resilient. We are resourceful, and nothing brings us together like a community. I'm telling you guys that, and I'm getting goosebumps. When you know you're doing something that will not just benefit you or your community, it just lights you up. No matter what you're going through at the time, you want to be part of it. And these are the strengths we should draw on to be able to make us better leaders in our community and to be able to start fighting for the things that are rightfully ours, namely access to financing. And we might have to do it ourselves. And hopefully at the end of this session, I would have inspired you enough that maybe you can start a movement in creating access to funding, particularly for women. We are natural leaders in food security. Women, whilst we may not have huge farms like the men did back in the day in the banana industry boom, but most women I know have a little small kitchen garden where they can happily bring food for their family or their friends or their work colleagues and share what they have. Women are instrumental and are extremely, how should I put that? They have this thing about them when it comes to grassroots development. We don't need to be out there showing what we can do. We do it from our communities and it's recognized, right? Adapting to climate change. That's something that I think we do and we don't even realize we're doing it. And when the rest of the world is out there telling us, oh, climate change is here and what we should do. In the Caribbean, we are already getting ready for these. When we have the extreme weather, when we have extreme heat, when we in the hurricane season. So think about all the things that you do to be able to protect your family and your communities, right? So why does all what I've just said matters? Rural women are already doing the work. All we need is access, support, and capital to scale what we are already driving. So I said all these things to let you know that we are already doing this. You are already doing all of this. And yet still your access to finance is limited, is measured. You don't have the same access perhaps as a man or as somebody who has a salary and probably cannot afford the financing that they're going for. And you are more likely to pay your debts back, and yet still you have no access. And we'll dive into why that is. But first, let's look at why we are here tonight. What is credit? The different types of credit and using credit wisely. Like I said on Tuesday, credit is the ability to borrow money or access goods and services while understanding and promising that you will pay later. It can help you make significant purchases, but it also comes with a huge responsibility. There's so many different types of credit. You also have to remember that when you take credit, you have a legal obligation to pay it back later. And later on in this conversation, I will speak to you about when it becomes legal, which is when you sign on the dotted line, and what you should do before you sign on the dotted line, and how the financial institutions almost hold you to ransom because there's an assumption that you are desperate for financing. And it's not something that maybe you even subconsciously you're not even aware of. It's something that it's almost like we've been made to fear perhaps not the word, but to feel like when somebody gives us a loan or borrows us money, well, not somebody, an institution, they're doing us a favor. So we are so grateful that we forget all the things around asking what they're doing to us. So every time you use credit, you are either building a stronger future or borrowing from a future to pay for today's wants. I don't know if you understand that. Every time you use credit, you are either building a stronger future or you are borrowing from your future to pay for today's wants. So you have to decide on which spectrum you are, right? Types of credit that particularly women in the Caribbean access a lot: credit cards. Credit cards. Credit cards are convenient, particularly in this digital world, in this world where we all want something nice from Shein or we want to order something from Amazon. But if the high interest rate is not paid on time, then it becomes a problem. I always tell participants of this program that if you are using credit cards to pay for basic items that are necessary, like rent, like electricity, like water, like food, then you are in trouble. Now, this is not to say that if your credit card has points and you want to use your credit card and make sure you pay the money right away back to the credit card, that is not good. I'm talking about the people that don't have disposable money and they are using their credit cards to pay for food, to pay their rent, and to pay for their bills. If you are doing that, it means that you are already in trouble. Hire purchase. I have store credit here, but I'm not sure. This is more relevant to perhaps the more developed world. I think we have some companies who do that here, but it's not as available as it would be in the developing countries, but higher purchase for sure. So you have these companies that you buy a stove, you buy a fridge, Christmas is coming. I want you all to be mindful. Think about what the interest rates on these things are. Think about if you wanted a stove or a fridge, if you save for 3 months, would you be able to afford it without the exorbitant interest rates? Let's say hypothetically a fridge is $1,500. Think about it that way. In some instances, you might be paying as much as $500 in credit on a $1,500 stove. Do you think that is not disproportionate? Do you think that you could have saved the $1,500 and saved yourself $500? So I want you to think about these things before you take any credit. Okay? Payday and quick cash lenders. So I won't mention names, but we know there are a lot of these companies that are now readily available. In St. Lucia, they are at the bus stops. They show up. That's not my dog barking, is it? Oh, sorry about that if you all can hear that. They show up at festivals on the evenings. And these things are specifically meant to target the vulnerable. People who have money will not stop at a bus stop and borrow money on a Friday afternoon just after they got paid or the week before they got paid. So be mindful of these people who are trying to get into your psyche, to tempt you to be able to do things that are unwise and that will get you in more difficulty later. Informal credit. So susus, family borrowing, and stuff like that. So susus, this is something that's traditional, it's part of our culture. I'm not sure if there's a different word for it in St. Vincent or St. Kitts. And for those of you who are here, please enlighten me because I'm here to learn too. Susus are when you have a few people in a group and they all contribute and everybody gets a hand at some point in time. Now, I'll be honest with you, whilst that's a good way of saving, it's also a very high risk. And I have heard of instances where people participate in susus and then one person runs away with the money and then they never see them again. Or one person gets their money and then they're not there to contribute. So what I want you all to think about is always think, if I can discipline myself to give somebody 12 hands of my money, can I not discipline myself to save that under my mattress or put it in a credit union or bank account? So always, and I say that not because susu is a bad thing, but because I want to challenge you to think about alternative ways of doing what's in your interest. Okay? So here's how I would say to use credit. We must make credit work for us and not against us. So use credit for income generating investments, tools, livestock, inputs, packaging, things that bring money back in. Track every borrowing and repayment. A lender will take you more seriously if you can show responsibility. So you have to be responsible yourself and hold yourself accountable. Or get an accountability partner, a friend, a sister, a member of Helen's daughter who you started this journey with, and hold each other accountable. Keep your spending aligned with your goals. Will this purchase help me or hurt me next month? Try to ask these questions prior to you borrowing or lending the money. Pay more than the minimum. The minimum payment, they will always give you a minimum payment, but it's designed for the lender to get the maximum interest out of you. So if you are able to pay more, pay more. So let's address a real issue, spending pressures on Caribbean women. And I say Caribbean women, it probably affects all women, but I can speak from our perspective. In the Caribbean, many women use credit, not because they are reckless, but because no one taught us the difference between debt that builds wealth and debt that destroys us. And today, social media fuels comparisons. I want this, I want that, I want what she has. Many people now spend hours on YouTube Shorts and TikTok and Instagram, and you will be surprised how that gets into your psyche, and you suddenly develop a need for all those things that you see. So impulse spending. You go on the Shein app. Shein's algorithm are designed to make you buy more than you need. TikTok finds, Instagram ads, all these things. Validation shopping looks like success rather than building success. Fast fashion and online shopping apps make it easy to buy emotionally, forget you're using borrowed money, end up paying 3 or 4 times the cost in interest. Credit can make us look like we are living well today, while quietly destroying our tomorrows. I want you all to remember that. Credit can make us look like we are living well. Look like. But what we are doing is destroying our tomorrows. Financial confidence doesn't come from designer shoes, matching outfits, the latest iPhone, pardon me. It comes from documented income, a good repayment history, control of your ability, of your money, sorry, the ability to fund your dream, not someone else's brand. Key things I want you to remember. Credit is a tool. When used with purpose, it builds businesses, homes, and futures. When used without discipline, it traps us in debt and limits our power. So if there's anything I want you all to remember is credit can be an amazingly powerful tool to get you on the way for financial freedom. However, if it's used badly, it can be destructive 100 times more than it can be beneficial. So think about credit. And I know everybody was excited tonight for this program on how to access credit because I'm going to tell them how to get free money. Unfortunately, these are the realities of credit, even when it appears that it's free. And I'll talk to you about that later. Okay? Credit funding and opportunities. In the Caribbean, traditional banks and credit unions remain the primary gatekeepers of financial capital. The credit unions have been doing a good job at competing with the banks. As to whether they're better, that's for your personal circumstances to decide. I have a different opinion. And as we go through this presentation, my passion and my possible disdain for banks, I hope it shows because I really love them. And I maybe I'm a little bit biased because that was where my career began in a bank. And I have seen how their punitive policies have destroyed lives and how our policymakers and don't essentially turn a blind eye and do nothing about the vulnerable people that it's affecting. However, many rural women still find these services particularly distant. So even though credit unions and banks are where you would predominantly go to be able to acquire finances, people who live in rural communities or particularly have informal ways of earning income, they still find accessing finance a distant reality. It's often documentation heavy. So the amount of requirements you need to be able to access that financing, it makes it impossible for you. And it's designed around formal employment. And most people, I'm not sure how many of you here participate in informal, maybe you can show a hand and I can have an idea. Any sort of informal income, whether it's a side job, but it's important to see how many of you. So if you're listening, just let me know you're there by giving me a thumbs up if you participate in any sort of informal income earning activities. That's good. Credit unions are often more accessible, but even then, membership requirements and collateral expectations create barriers. So the credit union, most of them now, you need a membership fee. So if the membership fee, I know some of them, the membership fee is as high as 500. If you're a small woman who's starting out a little juice business and you need $200, why would you now go and buy a credit union membership for $500 to be able to get funding for $400 to do a juice business? So I think some of it is, these are the barriers that keep people out of accessing the stuff that's supposed to be available to them. Only a handful of institutions design products around women's needs. I cannot say that any is available in the Caribbean in particular. I am hoping that Helen's Daughters one day will open the HD Bank. I'm still hoping for that. And where they can support women in general. In speaking about women's needs and products specifically designed for them, it would be helpful if there were such things as flexible repayment schedules for seasonal cash flow, group lending models. I have always been of the opinion that we should form a cooperative where, if, by the way, you only need 10 people, I believe, in St. Lucia to form a cooperative as per the Cooperatives Act of St. Lucia. But I just want you to imagine having a group of 15 women. I will bring it down to 10. And we each, let's say, for instance, we had $1,000. We each put $1,000 into a pot, and that would be the capital starting for the credit union. And that would mean that we'd start with $10,000. But let's say, for instance, Gemma, who is part of the cooperative, now decided she needed some startup money to do something, and it was going to be $5,000. We now would borrow Gemma the $5,000, but at a lower interest rate than the bank. And the $5,000, when Gemma repays us back the $5,000, that would go back towards the capital fund, but the interest would now become part of the cooperative. And can you imagine if we did this over and over? Eventually, we'd be able to pull the capital back that we own, but the interest in the cooperative now would be used to fund other ventures and other businesses. I think that would be a great model. I often speak about it, and I often hope that it will come into fruition so that the same monies that we pay can come back to help us. One of the things about specific products designed for women, which again, there's very little of it in the Caribbean, are more mobile banking solutions. Zero collateral on microloans. I just gave you an example of a microloan of $500, $1,000. Why would you need collateral to be able to get $1,000? But you don't need that for a credit card at 38% interest. Think about it. Think about who is benefiting. These products, when available, they can drastically change a woman's economic trajectory. So why is it that these things are not available to us? Is it because men are the ones making those decisions for us? Is it because the women who are at the top and who possibly can make a difference don't have the balls to do it? So credit unions is a way to get loans. We have some microfinance institutions that are supposed to help us, but again, some of the criteria for getting those microfinance are punitive and really not available to help the people that it should. So yes, if you were employed, you will get it, but the people who are not employed in the formal setting would not be able to get it. So when we look at funding opportunities, we normally look at banks, credit unions, micro-lending institutions. But do we ever think about savings, our savings, and how our savings can not only offer us funding, but also a sense of accomplishment and pride? Can you imagine if you made up your mind to do something and you discipline yourself to just save the money, and that you can borrow it now to your business? And next week, we will focus a bit more on how that can work. And I know some people say, but I don't have money, so where I'm getting it to save? But you don't have money, and then you're going to borrow money to pay twice as much as what you borrowed to somebody. So you're making it worse for yourself rather than making it better. Okay? So yes, everybody at some point in our lives will need credit, but it's how we go about getting that credit. So when women actually finally have access to appropriate finances, we see immediate and measurable outcomes. We see increased production. We see better market participation, improved family well-being. The multiplier effect is massive. Investments made by women cycle back directly into our communities. So again, the question is, why isn't more being done to support access to credit, access to funding? And you may think you have access to funding, but is the access that you have at the punitive interest rates and the repayment processes that you have to pay back, is that really access to finance if it's hurting you? So non-governmental organizations form a crucial gap. For instance, Helen's Daughters. I'm not sure if many of you are members and know that Helen's Daughters is a non-profit organization. And by providing you with such as a webinar tonight, Helen's Daughters is empowering you to make better decisions around credit and funding opportunities. And also, I believe Helen's Daughters also, if there is a grant, from what I remember, or something available, they will share it with you. I know they've had workshops around grant writing skills, around how to apply for this funding. So all this is part of the access to credit, right? So organizations like Helen's Daughters, they act as both financial bridges and knowledge accelerators. However, dependency on who contributes to them sometimes can affect program continuity. So that is why it's important when I'm not saying if you become a member of Helen's Daughters, you try and use whatever skills you have to give back. Because sometimes the funding to be able to help you and continue programs like that will not always be there. You sit here today and possibly you take that for granted, but all this has to happen with money as well, right? So that's just a little plug-in I wanted to put there, right? So despite progress, the reach of these financial solutions are limited. Many deserving women remain invisible to the system, not because of lack of ability and ambition, but because the system isn't structured around the realities of women, of Caribbean women, of women who are into agricultural businesses, of women in the informal sector, right? Access to funding and credit shouldn't depend on geography. It should not depend on your gender. Neither should it depend on whether or not you have a formal income. Women are already driving economic value. They simply need financial systems that recognize and support that fact, right? So I think we touched a little bit about that earlier, about the barriers to accessing credit. So in our society, women are still expected to prioritize caregiving over entrepreneurship. So we are looked at as mothers, as the ones who come home and cook and clean. But when it comes to seriousness in business, sometimes we are overlooked. However, I want you to remember that we are still better at managing things, at organizing things. And these are some of the fundamental basics you need to be able to be an entrepreneur, right? When a woman attempts to step into formal business ownership, her ambitions are sometimes minimized or not taken seriously, especially if the business is a home-based or agricultural business. That, I can tell you, is a fact. Often we are not taken seriously because what we do is considered menial. These expectations quietly restrict our access to capital and weaken our bargaining power. Business ownership can often require visibility, networking, negotiating, traveling, making public financial decisions. And culturally, these things can discourage the level of independence in a woman, especially younger women. That limits market participation and creates a perception that women's activities are small side hustles instead of legitimate enterprises. And I think I mentioned that earlier. So people will, hustle she on. Like they don't want to take you serious. But guess what? If you don't take yourself serious, nobody will, right? The majority of owned property in the Caribbean is owned by men or suits in complex family and land structures. And not all of us come from a family with a title. Yeah. So when institutions demand collateral, land, titles, high value assets, women are already at a disadvantage. This has nothing to do with the ability and everything to do with an outdated system of how asset is owned in the Caribbean. The other thing that I wanted to just bring a little bit, now I'm going to speed it up a little bit because I'm conscious that you all may have a lot of questions. But I think, yes, on Tuesday, I spoke to you about in St. Lucia, there's some legislation that was passed about credit scoring and credit history and credit checking. As a person with a passion for financial literacy and always reading and keeping up to date on updates on stuff like that, I am a bit concerned about that, particularly because when you introduce a system of credit history as a criteria for people getting access to loans, it disadvantages those who perhaps never had credit in a formal setting, right? So, for instance, rural women or women involved in agriculture, they earn informally, cash sales, agriculture, day-to-day trading, leaving no digital or documented trail. So how is it that a credit bureau can now access and see what you've bought, what you've paid, when you've paid it, whether you've paid it late? So even in introducing legislation, is this legislation actually being made with you in mind when you form such a large percentage of the people who not one will need access to those credit facilities, but also who is the driving force behind food security in your particular countries, right? Without proof of earnings, you're going to appear as inverted commas risky on paper, even though you may have strong repayment disciplines through communities and saving models, right? If you save it, how is that going to translate into a credit bureau? Who's going to be able to access what you've done and be able to give a fair assessment of your credit history? Okay. So most financial services are still designed for salaried workers who receive predictable monthly incomes, but rural women and women involved in agriculture, cash flow is seasonal, it fluctuates with harvest cycles, tourism patterns, or market disruptions. Without flexible repayment structures, many simply cannot engage with that system, even if they are fully capable of paying, right? There are also many biases within the financial institutions. This is still the silent question. Who is the man behind this business? Anytime a business is doing well, and I've had that, people just assume you just come to the bank to deposit and it's some man that is doing your business, that is behind the scenes, doing all the work. Women are sometimes asked for guarantors or second signatories, right? The idea must be proven more rigorously, even when data shows that women have higher repayment rates globally. Gender bias is subtle, but I want you to know that it is powerful. Okay? So now we're going to move into some of the things I want you to ask when you are going to get a loan, a credit card, anything to do with lending. And that is very important. You might think it's just, oh, I need it, I need it, I need it. But challenge yourself. Even if you happen to still take the loan or the thing, ask those questions, right? What is the exact total amount I will repay? Not just the loan amount. You want to know the interest, the fees, and the penalties if you are late. All of us will go through life events where once in a while we will be late on our repayments for a loan. But if you take the loan and at the time when the lateness happens and the payment is $100, $250, how is that going to set you back? So I want you to be able to ask those questions. What is the interest rate and how is it calculated? Is it monthly or annually, fixed or changing, compounded? These are the questions I want you to ask. What are the fees involved? Processing fees, insurance fees, late fees, early repayment fees. We spoke about that on Tuesday. Most people don't even know their early repayment fees into the contract embedded around them lending, right? Insurance. Most institutions now include some insurance component, but you don't even know what are you insured for? Ask those questions. Am I insured if I make a late payment? Am I insured if I happen to be off sick for 6 weeks and the NIC money that I get, it does not cover it? What are you just paying insurance fees for insurance? How many of you all have loans and there's insurance component on it and you don't know what you are covered for? So why take the insurance? Why are you paying the extra money? Are you just fattening the pockets of some insurance company? How long do I have to repay? Shorter loans means higher payments. Longer loans means more interest. Always remember that. Shorter loans will mean your payments will be higher, and the longer the loan, the more interest you will pay. What is the monthly repayment, and can I truly afford it? That's a question for you to ask yourself, not the person lending you. You have to always assess your repayments ability on your worst month. You don't assess it on your best month, especially because of the environment you're in where your income is inconsistent. Assess your repayment model on the worst month you possibly have. What happens if I miss a payment? Will they charge penalties? Will they seize whatever collateral you had put up for that loan? Will your guarantor be affected? And I will speak to you more about guarantors and to tell you that if you are guaranteeing loans or lending for people, you may be at risk. There is a case that was just decided at the High Court in Antigua, and that highly surrounds collateral, and it's going to make such a difference in how the banks have been treating us. But I'll talk to you about that towards the end. What collateral or guarantor is required? And what is the risk to you or the guarantor? Again, that contributes in what I tell you about the case. Sometimes people go and guarantee things for you and they don't even know what they risk at. So you say, oh, I just need a loan for 10,000. Somebody will sign their house, but the house is worth 800,000, as was in the case of the case I tell you about. And then the person end up losing because you didn't pay. So you have to always remember the risk and the losses that could be associated with taking out credits. Are there any hidden terms that you don't understand? If the language is confusing, trust me, that is not accidental. That is by design, so that you will not ask. So ask. Can I repay early without a penalty? Predatory lenders often discourage early repayment. So look out for that. Okay? How does this credit help my business grow or secure my future? If it doesn't create some income or long-term value, it is not a wise debt. One of the most important things about the law of borrowing, if you do not understand it, do not sign it. A signature is a contract. A contract is a legal obligation. Confusion is a risk, and the lender already has the advantage. Remember that. Okay, I'll go on until about 7:05, and then I'll take a short break just to look at your messages and if you have any questions, and then we'll continue, okay? So, effective strategies for securing credit. When we talk about securing credit, we must keep it real. Banks love to say, bring a business plan, show proper bookkeeping, build a strong network, find a mentor. But what we know is that many rural women or women involved in agricultural businesses or quote unquote side hustles don't have the time, the tools, the money to meet those expectations. So we'll explore both the ideal strategy and practical alternatives women can actually use. A business plan. Ideally, a business plan is a whole written document that somebody would pay. Me, in my instance, by the way, I don't like doing business plans. To be able to write these things that the loan officer does, one, not understand it. Secondly, will never use it. But for some reason, they will ask you for a business plan. They will ask you to show clear goals, market opportunity, financial projections, how the loan will be repaid. Lenders love documents to show, clarify, and direction. But the reality for us women who are hustling, right? Professional plans are expensive. A good business plan can cost you about 3,000 EC dollars. Writing skills and computer access is very limited to us, right? Women are too busy farming, selling, looking after their families, and just surviving for people to be asking us all this nonsense, right? So what I would suggest as a practical alternative is a simple one-page business overview. Many of you use your WhatsApp voice note to be able to send messages to friends, to send a little gossip here, gossip there. WhatsApp has I recently found out about it. I think one of my daughters was telling me, has an AI tool. Just speak your mind as to your business idea and ask the AI tool. Those of you who don't know about AI, artificial intelligence, that's where the world is going. Just ask the AI tool to create a business plan for what you've just said, and you'll be surprised what you can come up with. Okay? So, a simple one-page business overview for those of us who are supposedly hustling and in informal business settings would do. Yeah? So what you say in it is what you do, who will buy from you, how much you'll make weekly, and what you need and why. You can also choose to keep photos of your business activities, screenshots of customer orders. So you save a screenshot of a WhatsApp message where somebody ordered 20 dash-in from you or 3 packets of CMOS. Save those things. So if you do that, you now can go back in real time and say, listen, so simple tools like that, you have your phone with you all the time, that can help you make a difference in doing what the banks would consider a business plan, where you don't have to pay somebody $3,000, but you can make your own business plan. Letters of support from buyers, or for instance, the school feeding program. If that's where, if for instance, you were selling, your produce to a school or something like that, just get a letter from them saying that they bought from you for how many months. And you don't have to do that when you need the credit. You can do that periodically and just hold them, take a picture of them, and you can utilize and use them at a later date when and if you may need credits. A plan doesn't need fancy graphics. Banks just need proof that the business is real and growing. Okay? So just remember that bookkeeping. Ideal scenario would be a neat spreadsheet, an accounting software like QuickBooks, monthly reports. Banks want to see stability and profit. In reality, QuickBooks and these softwares cost a lot of money, and you need time to be able to use it, to learn to use it effectively and efficiently. Not everybody knows Excel. Excel was one of the most complicated things when I was at school, far less a hardback like me now. So I would not say that it's a skill that you can just open and start putting in your information. You'll know how to, you'll need to learn how to do formulas, how to do anything to make these programs efficient to you. Receipts are often written on brown paper or notebooks. How is that practical to you, right? Practical alternatives. A ruled exercise book. Oh my God, where am I? Sorry. A ruled, I missed out on my thing. Okay, there we go. Sorry about that. I don't know what I touched. Okay, so a ruled exercise recording, just showing the date and your sales. Expenses, market day tally sheets, WhatsApp photos of your transaction. Keep your vendor receipts in a label envelope, and you can take photographs in case those receipts fade. And create a simple expense and income chart. By the weekend, I'm hoping to send you guys quite a bit of information that you all can use. You could choose to use it, print it, and use it if you care to, or don't look at it at all. What you decide to do if it is you. But I will prepare some templates for you that you can use. So bookkeeping is not about technology. It's about organization and visibility. Networking and mentorship. Your ideal business events, meet investors, get advice, opportunities come through those who know you. The reality is you don't have a babysitter. You cannot travel for long periods of time. Work ends when your children go to sleep. Mentors are busy and hard to reach. So most times the people who can mentor you, they don't have time either. So practical alternatives. The Helen's Daughters Market, a brilliant place for you to network and meet other women and share your ideas. So those of you who are just doing this course, hopefully you can join Helen's Daughters on the next membership drive. And these are some of the benefits that an organization like Helen's Daughters affords you, is networking. Free and simple networking. You will also meet people there because your customers are the people who would traditionally in the world of mentorship be your mentors. Most of them will stop and have a conversation with you. You will find that you will meet people you wouldn't otherwise meet at those markets. So when and if Helen's Daughters the membership becomes available, I encourage you to join. It is a place that is worth, an organization that is worth being a part of. WhatsApp business groups, that's a good way to form. When you guys live here in your individual and respective countries, you can form a WhatsApp group to support each other in things such as financial literacy. You guys utilize Facebook and Instagram. And I say utilize it for things that can benefit you, not to be able to spend money you don't have, to watch people's business that don't give a toss about you. Utilize it to help bring financial freedom for yourself, right? Another thing that's so good at helping you is supporting other women businesses. I make a point that if I have a friend or somebody I know who's selling something, I would make a point of buying it from them rather than going to a mainstream supermarket. If we all do that, do you know what difference we could make? Right? It increases our power collectively. Peer mentorship, women advising women with real shared experience. That's what I'm doing here today. You all might think I'm some expert on, and maybe in some sorts I am, but a lot of it is experience, right? A lot of it is because I've started businesses. Some have failed, some have worked, but I learn each time when I come back. So there are things that you know that I wouldn't dream of knowing. I would love to be able to be in a setting where I can learn from you among this group. And let me just see how many people are here so far. 160 people are here. That's 160 different skills we can potentially hone in on, right? 160 different skills we can potentially hone in on. So there's a lot of experience and expertise, even among ourselves today, that we can utilize to be able to build collective power for access to the very same credits that we need, right? So tonight we're going to we're going to continue to look at areas at which what the reality is and what we can do to be able to get the same outcomes that the places that we want to borrow money from are expecting of us, right? So credit is not reserved for the privileged. It belongs to women who produce, nurture, build economies every single day. We are not asking for favors. We are securing what we already deserve. And if we all remember that, you will come collectively and for us to be able to understand. And the next time you decide to take credit, think how it's going to affect you. It's now 7:07. So just one more thing, and then I'll leave the case studies for after. Let me just go into the predatory lending. So I think I spoke a little bit about that on Tuesday, but I just wanted to tell you about the learning signs of predatory lending, right? As we push for improved access to credit for aware women, we must also stay alert to the dangers of predatory lending. Not every organization offering money has good intentions. Here are the key warning signs we must look for in our Caribbean reality. When you move to the States, or those of you who stayed there or gone there for 6 months, or have gone to England, the way credit operates is different to the way the very same banks that are in the Caribbean, they operate differently because of the laws and the legislation that's impacted by them. Some of the crap they get away with in the Caribbean, they could never get away with that in the countries where their head offices are, right? So when a lender is aggressively calling, sending WhatsApp blasts or hanging flyers in communities, it's often a sign they rely on desperation, not good financial products. Excessive lending fees. In the Caribbean, some lenders charge processing or admin fees before you even receive the loan. Women end up having to pay far more than they borrowed, and that is a red flag. And even some of the banks say, yeah, there's a fee they charge as part of the loan. I never saw the necessity for that. You want me to take a loan from you and I have to pay you to take 10 years to tell me that I approve of a loan? Come on, guys. We all need to start asking for better and more from these banks. High interest rate. If the interest rate feels outrageous, it probably is. Many paid loan schemes in the region can exceed 40%. 40%. Have you heard that? If you take $100 out, you're paying them back $140. Does that make sense to you? What is, according to the people, make it make sense? Does not make sense. Lender reputation and complaints. If you can't find them on a physical office or you hear stories about harassment from them, walk away. Reputation matters. Honest lenders have nothing to hide. Prepayment penalties. In many legitimate systems, paying back early is rewarded. predatory lending wants you trapped paying interest longer, so they penalize early settlements. Normally, they would omit taxes, insurance in the payments. If repayment terms seem vague or incomplete, expect hidden costs. So if they give you one repayment and then later on they're telling you, oh, you have to pay insurance, you have to pay that, you have to pay that, that's already a sign of not a good thing. Transparency should be non-negotiable. False statements on loan application. If you go and get a loan or credit card and the person who is doing the documentation with you encourage you to lie, for example, they tell you inflate your income or claim for business expense you don't have, that's dangerous. You will still be liable when things go wrong. These people are only there, one, to boost their sales targets or to make profit for their companies. If a lender encourages you to lie, run, 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 run. If they don't ask questions about your ability to pay, it's not because they trust you, it's because they want to profit from your struggle. So if you go and ask a bank for a loan and they don't tell you, how is it that you plan to repay? And they say, okay, we'll give you the loan. Do you think that's a good sign? No. Too good to be true. Money immediately, guaranteed approval, no documents, low weekly payments. Those promises can only come with heavy traps and financial burdens later on. Seek legal and professional advice before signing anything. Talk to someone who understands finance, a credit union officer, a financially literacy trainer, an attorney. All these things may be costly. You deserve clarity. But what I want to empower you today is that you don't need to talk to no financial advisor. You don't need to talk to no lawyer. Yeah, I say that because I have to say that. Guess what you can do? Take the document home, sit down and read it. Every one of you, by virtue of the fact that you're attending this webinar online tonight, is capable of reading a document and being able to decipher whether it's in your interest or not. It might take you 3 days to read it, but read the document before you put your signature on it. Empowerment is not just saying yes to funding, it's knowing when to say no to exploitation. If the loan does not help you grow, then it's a burden, not an opportunity. And on that note, I will take a break. I will take a break to look at your messages and to anybody have any questions. We'll go through about, let me see how many minutes. Okay, we'll do 7 minutes.
Thank you so much, Davy. This was, as usual, just very insightful. I always learn every time I'm in sessions with you. We have 5 questions in the chat, and then we have a few hands raised. So I will try to take some of the questions in the chat, and then we'll do the raised hands. First question from Joycelyn. Does it make sense to be in more than one credit union?
Joycelyn, I don't know. To me, when you spread your money, you dilute your bargaining power. In saying that, I don't think you should have all your eggs in one basket. So it's finding the happy medium. Because if, for instance, you never open an account at, forget the credit union, because at the moment it's easy to open an account there, but the banks are more difficult because of international rules that they place on them. So I say always have at least 2 bank accounts. Maybe you can use one for savings and for the long-term goal savings, and the other one for everyday business and short-term savings. But having it at 3 or 4 or 5 credit unions, how are you even going to remember where you have what? So I say you have to find a happy medium.
Thanks, Davy. Also from Joycelyn, is it better to save large sums of money in the credit union or bank interest-wise?
So the credit unions, they need your money to borrow it back to you at a higher interest rate. So for me personally, I save at credit unions, and if I had to lend, I would lend at banks because the credit unions offer the highest interest rates in the Caribbean at the moment rather than the banks, because the banks really don't need our money, right? So they don't pay as much interest on savings, except if there's a crash in the market and something happens and they need our money again. But yeah.
Indeed. What about mortgage and early or extra payments? Should the extra payments be made on the principal, interest, or both?
Always, always, always on the principal. And you should never just do a payment directly online or go to the bank and say, I want to do an extra payment, because almost certainly they will split it again. So I know in St. Lucia, 2 of the banks, their code for direct payment to the principal is a 419. Ask for you to put it directly on a principal, and you should never take their word for it. Periodically, ask the bank for a statement on your loan. That is something you're entitled to, even though they charge you $5 to look at it. Because what you might find is if you're doing early payments and you go to the counter, they might still be splitting it, and that puts you at a disadvantage. So you now can ask them to reverse it and recalculate it. We will be talking more about that. I have a template that I want to show you all how early repayments can help you all. So just stay, hang in there and we'll go through that.
Okay. Someone mentioned this is a little tricky, but loans are what make your life easier. Someone whose salary is small can't afford to save to get a mortgage or vehicular loan.
Okay, so imagine you telling me your salary is small. You cannot save to take a vehicular loan, to take a loan for a vehicle or to get a mortgage, but you can take a loan to pay the bank 3 or 4 times what if you had saved. Some huge debt, you're not going to be able to save all of it. A mortgage, very few people can afford to just go and take $400,000 and buy a mortgage. But guess what you can do? If you are a 25-year-old, I have a 20-year-old and I'm already encouraging her to put some money aside. So when she's finished school, she now can come back and take a loan. So let's say hypothetically, and there may be some of us who may not be able to save as much because of our age, our income capacity now. But think about you and your children going forward. So if your child or you are able to save for your child $100 a month now, until they turn 18, and then when they take over and they start working, they save $200 a month. By that time, the child is ready to get a mortgage at, let's say, 27. That child would have a sizable amount of money that they can put towards a mortgage. So now, instead of taking a mortgage for $300,000 and paying interest on it, they might be able to take a mortgage for $150 because they've already saved the $150. So when we're looking at huge commitments, we look at it in terms of how much can we save to lessen the burden on us later. So if you look at it from that perspective, it shouldn't really matter that you're not making a lot of money. What you want to reduce is the lenders making more money off you. Okay?
And we'll take one more. There's another, but I think we'll take that one later on. Can one refuse insurance?
Unfortunately, you can't. Not with a mortgage in St. Lucia. And even now, and that is why it's important to read your mortgage document before you sign it. I recently had a client who had a mortgage. Part of her funding was dispersed. She needed some more money because the changes of the cost of material post-COVID, because the mortgage was approved before COVID, had gone up, and she needed to get more money. Do you know they forced her to do a health medical check, and when her blood pressure came back high, they were refusing to disburse the funds until she got it? But that was indicative that she had not read her loan agreement, that they were able to do that. Imagine a bank has a life insurance on you, they hold your house as a lien, and then they still want to force you to do that. So unfortunately, no, the banks at the moment, and even the credit unions, that is a requirement of you getting the loan with them, that you have to have insurance, whether it be life. But what you should do is to check and see, what does that insurance cover? Should you lose your job, or you get some debilitating illness, or you get cancer, life-threatening cancer, will they pay off your mortgage? So before you sign a mortgage contract, find out how much that insurance can cover you, because you might just be paying for an insurance that will not cover you for any of those life events. Okay? So we'll answer the rest later, and Kiflin will just take 2 short questions if anybody have their hands up.
Sure. Well, I saw we will take Sancha and Corina, and we will take the other 2 later.
I promise I'll listen to you later. I just want to get through this.
Sancha, you can go ahead.
Oh, sorry. I didn't have a question. My hand hit the question, the hands up in error. I'm so sorry. Devi, this is just an amazing class.
Oh,
thank you, Helen's daughters. I'm learning so much from you guys, and you do such amazing work. Thank you, both of you.
Thank you.
Thank you.
So we will go to Corina. You can go ahead.
Hi, good night, everybody. I don't have a question. I just have a little bit of input coming from the credit union aspect. As well, that is in St. Vincent because I used to work at a credit union before, and sometimes your loan officer may advise you to not be as truthful on the application. For sometimes the reasons are good. Hear me out. Like for instance, someone may someone may be interested in purchasing a vehicle, for instance, right? And it might be a vehicle loan that is it's not costing that much. Like it might be like around $25,000. Usually, when you when you want to do a vehicle loan here, they would ask you to do a lot of things. You end up having to do a bill of sale. You usually have to go through a lot of different processes, and based on the age of the vehicle. So let's say you want to do a vehicle loan for an age that is not so recent, it then puts you in a compromising position where they sometimes they actually turn it down or you are unable to do a loan special for the vehicle. So sometimes the officer might, based on the special that they have going on, like for instance, seeing that now is around Christmas time, you would have Christmas loans specials that would cover up to a certain amount. So like for example, if somebody wanted to do a vehicle loan for a vehicle that is
So I don't
older
mean to
brand
cut you
vehicle
short,
that is
huh? I don't mean to cut you short, but in the interest of time, just tell me what is it that they would encourage you to lie about? What is it that would encourage you not to be truthful about? Just give me an
so
example.
what so what they will tell you to do is rather than stating that these funds is for a vehicle, they will tell you to do it as a Christmas loan and just say it's for Christmas expenses. Because with the Christmas loan, it would have less requirements. You don't have to bring in much. Once it says Christmas expenses,
Mhm.
they don't really ask
So,
you to bring a lot of
so can I tell you
invoices.
something? I have to move on, but
Uh-huh.
I'm going to tell you something quickly about what's wrong about that. So a vehicle
Okay.
loan is normally between 6 and 8%, right? A Christmas loan is probably about 15 or 16%. So by telling you to do that, you are at a disadvantage. Do you
Well,
understand how
in
they are still making money? Because the interest loan
yeah, but in
for a personal loan is still more than an interest loan for a vehicle.
so in St. Vincent's, it's
Mhm,
a bit different. Because for a regular consumer loan, the
mhm,
interest rate would be about 12% interest, sorry.
mhm.
And
And
with
how much would for a
the
vehicle?
for vehicles, it's the regular vehicle loans, it's 12% and 25%
No, no, no. I
deposit.
checked that out. No, no. St. Vincent is on par with St. Lucia when it comes to vehicle loans. The interest rate is lower than a personal loan. But we can have a discussion about
That
that later. Let me move on. So when we get to the end,
okay, no
we can come
problem.
up about that. But I can almost tell you the reason why they do that too is so that you can pay more money. But let's have a topic about it later. Let me move on. But nice
Okay,
talking to you. Thank you.
you're welcome.
All right then. So, ladies, back to our presentation. So tonight I prepared two scenarios and I just wanted to go through it really quickly with you. Because again, if everybody have to give me their perspective, it's going to be a bit long and much. And I want to get through as much as we can to be able to help you. So this scenario is about a committed family entrepreneur. Shanice, I call her, she's 39 years old. She's into rural community farming. She has a small poultry and egg operation. Her family situation is such that she's a single mother of three, the ages of her children. Shanice works part-time at a local grocery store while running her poultry farm because before sunrise and after working hours. She's applying for a small loan to expand her coop and purchase more feed to increase egg production for a school breakfast program. She arrives at the bank with 3 months of steady poultry sales receipt, a letter from the school confirming the demand, and pay slips from her grocery job, right? So the loan officer likes her because she has stable income and she sees the potential in the business. But here's the twist. The loan officer is concerned that Shanice's responsibility will limit her ability to manage and expand her business. They question whether she can balance everything, implying that her children could become a burden to the business. right? Does being a parent make her more or less reliable as a borrower? Right? And I'm asking that rhetorically. Think about it. Should family responsibilities be viewed as a risk or motivator? What support system, co-ops, workforce could strengthen her case, right? Is the loan officer being practical or biased? I say she's being biased. So I chose this particular thing to show you somebody who has a job and who's doing a side hustle, as we call it, right? She would more than likely get the loan because she has a pay slip. But look at the type of questions she's being asked. Now, had she just gone to get that loan, just like the previous speaker said, just for her to buy some Christmas presents and she brought her pay slip, do you know that all those questions they ask her would probably not apply? What is it about lending and people in the informal workforce that there is an implicit bias towards us, particularly women, right? So let's look at the next scenario. The next scenario is Tasha. She's 28. She lives, let's say, in Ancillary or Coastal Village in St. Kitts and one in St. Vincent. She's into CMOS farming and value-added products like gels and soap. Her family situation is a bit different. She has no children, no dependents. She left a hotel job to run a business full-time. She supplies to the market vendors and sell branded products on social media. She wants a loan to scale packaging and expand delivery. She arrives at the bank with strong sales record, customer testimonials, proof of weekly contracts from vendors. The loans officer sees the potential, but they worry that if tourism drops or storms interrupt production, a single income source puts repayment at risk. Right? Tasha confidently explains how her vision should be, just like I encouraged you to do earlier on a single piece of paper. Yes, she has no secondary income. She has no collateral. She has no household partner to back up support. So her approval, guess what? The bank officer told her approval is delayed until she can show more financial security. Now, how many of y'all think that situation would apply to y'all? Had y'all not have a salary slip to be able to show? This is what happens every single day when a woman in agriculture or with no formal source of income shows up for a loan or credit to be able to make her business better, right? I mean, somebody comes to you for a loan and you can see how well that they're doing. Rather than look at things like whether or not her production will be interrupted by storm, you should be able to support her by encouraging and telling her, what are we going to put in place with the funding I'm giving you is there a way you can store production for when the storm comes? Are there seasons when you can probably produce more to be able to have in stock for when you need it, to be able to allow you to have continuity of service? These are the kind of lenders we want in financial places where we go. Those that can see beyond our ability to pay, but rather see us as the entrepreneurs who are going to make a difference in them keeping their jobs, right? So why is independence seen as a risk instead of a strength? So in the first scenario, having children made her seem like she was vulnerable. She wouldn't be able to care for her kids. When are they going to learn that women can do everything? We really can, you know, right? When are they going to learn that we can do everything? Does not having a family allow her to be more focused, have time and flexibility? What alternative financing, microloans could support her possibly? So in Tasha's case, what would we suggest to Tasha? Can you imagine you need some money? So that is when cooperatives come in place. That is when the model of cooperatives I spoke to you about earlier perhaps can help somebody like Tasha. And also help Shanice, right? Is her crop risk being overemphasized compared to her growth trajectory? Why? Why are they focused more on the storm rather than how much she can give, right? One woman is judged because she has a family, the other is judged because she doesn't. When the system looks for a reason to deny credit, women always lose, no matter their circumstances. What should banks actually measure when lending to women? Why are we not taken seriously for loans, even though we work so hard? Across the Caribbean, rural women grind long days on their farm, early mornings at the market, late nights caring for their family. Nobody can question our work ethic, nobody. And yet, when we walk into a bank, our hard work is never good enough. Here's why. The system recognizes paperwork, not sweat equity. I often hear Kiflin, the ED of Helen's Daughters, always speak about sweat equity, and it is so true. We have a value placed on paperwork and not what we can do. Banks care about what they can see on paper, not what they can see in our hands. Cash-based businesses are invisible to financial institutions. If sales are not recorded, no financial history, no documented income, no proof of profit, there is no loan. Lenders assume informal business equals to instability. Family responsibilities equals distractions. Agriculture is seasonal uncertainty. These assumptions undermine even the most reliable women. Bias remains embedded. Women are still perceived as borrowing small money. Like, we're not capable of borrowing big money. Running side hustles. We need a man to guarantee a loan for us. Banks trust numbers more than narratives. And that's where bookkeeping becomes our weapon. Now, those of you all who know me or who met me before, bookkeeping is my thing. I always tell people, I am not an accountant, but I genuinely believe I'm better than one. Because without accurate bookkeeping, an accountant cannot assess where you are. And bookkeeping is about organization. Bookkeeping does not have to be expensive. You all have a cell phone. Utilize it to your advantage, right? Utilize it to your advantage. The key to be taken seriously is bookkeeping. When your money is organized, you are no longer guessing, and the bank is no longer guessing about you. Bookkeeping helps you. Without bookkeeping, I think I make money. Bank sees risk, no creditworthiness, constant financial stress, invisible income, and you are primarily dependent on luck. With bookkeeping, here's my monthly profit. The bank sees potential, strong business identity, confidence and control. You have documented revenue, and you are prepared for the growth that will come. So that is why every time I do those sessions, in every single session, I will go back to bookkeeping. It is hard work. It turns hard work, into measurable results. It proves profitability and cash flow. It allows for businesses to plan and scale. It supports tax compliance and grant eligibility. And when we speak of tax compliance, in the last week, we'll speak of that. And you'll wonder, why are we talking about taxes and business regulations? I always say it's better to spend $1,000 and make $1 million than you spend $10 and you make 100. But with the million comes responsibilities. If you are okay in making $50,000 a year for the rest of your life, then that's fine. But if you want to make more money, you have to be prepared to pay more taxes. And in doing so, you have to be able to be compliant, to be able to meet up with the tax demands, or else Uncle Sam will come after you. So the final session, that way we'll talk about about taxes and how that will impact you and your businesses. You deserve the same respect men get in financial rooms, not because you work hard, but because you show the value of your work in financial terms. Bookkeeping is not just paperwork, it's proof of your power. It is your voice in rooms where assumptions silence women. All the time, assumptions are made about you and your finances, which is why you don't get credit. Prove them wrong. The moment we start doing the bookkeeping and we're going to shut all of them up. Who's going to be able to deny us access if all of us come and we know we come and we come good? We're not lying like the credit union tell us to lie. There'll be no need for you to lie because you would have kept up your bookkeeping and you can show where you did well, where you've done not so well and you've compensated, you can show growth, you can show the patterns. That is what bookkeeping is about. Okay? So, technology. All of you are here today, which means that you may not be great at technology, but you are able to navigate technology. This is where the world is moving. You can now apply for loans online, right? Most things are digital payments. You can now pay your electricity, your water through your app. And even if you're not doing banking, there's credit unions with apps now that you can use to pay all your stuff. Most places now want to pay you directly into your bank accounts. So this is where financial literacy is taking us. So you have to try and keep up so you can stay in. So the role of technology in financial services. Technology is breaking down walls that keep women out of financial systems. With mobile phones, a woman does not need to take a bus to go to town, wait in long lines, or lose a full day's income to do basic transaction. Do you remember the days when you got paid and you had to leave work early, but the boss wouldn't pay you early because you have to go and cash the check? That's not necessary. Open a bank account or credit union and ask your bosses to pay you directly to your accounts. Then you will now use those accounts to be able to pay your bills directly, and you have a record of what is happening. All that is bookkeeping. Bookkeeping in your personal life will translate to bookkeeping in your business life, right? You can spend and receive payments, top up your accounts, your phones, you can top it up, check balances right on your phone, even late in the night when your kids are asleep, when your full day finally slows down. Digital lending applications are allowing faster approvals, less paperwork, and no need to physically visit an office. This is particularly important in the Caribbean, where most banks and credit unions close between 8 a.m. and 2 p.m. The same peak hours when women are farming, fishing, selling at the market, or caring for their children. So imagine you have banks that are 8 a.m. to 2 p.m. So I'm sure when Helen's Daughters opens the bank, it will open from 6 to 8, and then it'll open again from 4 to 9 to be able to accommodate you. I hope the ED is hearing that. The same peak hours when women are farming and fishing is the same time the banks are open. Technology allows women to control their finances without asking for someone to drive them home, right? Without asking them to drive them to the town, or without losing a day's work. It removes the shame and intimidation that come with visiting a financial institution. It empowers independence. Women no longer need to wait for permission or accompaniment to handle their money. We must acknowledge some barriers, though. The limited internet connectivity in rural communities in mountainous areas can prove a challenge. Older women unfamiliar with smartphones and concerns about online frauds and scams. So training, affordable data access, and secure digital tools are essential to make those digital processes and that they don't leave anybody behind, right? We are moving towards a world where women can get a loan based on a mobile transaction history, not collateral. Save in digital savings group with full security. The same thing we spoke about SUSUs. So there's this, I believe it's in Uganda that they do it. There's a digital app where it works just like a SUSU. So there's no risk of you losing your money, and every month somebody gets their money back, right? You can receive payments directly from your buyers and market. So some of you all who sell, let's use the CMOS example. Somebody wanted to purchase something from you, they come in from the States, they can make a transfer to your account and you can have it delivered somewhere waiting on them. So in some instances, digital platforms can work to your advantage because you can even pre-sell your items, and that can allow you to plan and have more stuff available for your market, right? Access to insurance and financial products with one click. This is not a distant dream. This is happening now in parts of Africa, Asia, and even within some of our OECS countries. We just need to scale it up. Digital finance eliminates distance. It reduces discrimination because nobody sees you and see what you look like, who you are, to be able to make a determination of you. It puts power directly into your hands, literally. With a mobile phone, a woman can become her own bank. Okay? So, solutions to improving your access to credit. What can we do and what must we change? I would say create an action plan. Document your business. All right? Even in simple ways. Keep a notebook or sales and expenses. I cannot stress on bookkeeping enough. Photograph inventory, markets, and your customers. Save receipts in envelopes or take photographs of your receipts. Build a visible cash flow. Start small, but showing that you're consistent. Start small, but be consistent. Secure letters of intent from buyers. Join your local co-op. Lenders believe what they can see. Use supportive networks like the HD markets or other women-led groups. Network doesn't require leaving the community. Seek advice before signing anything. Talk to mentors. Liaise with the people in your NGO, such as Helen's Daughters. Ask questions until everything is clear. Confidence comes from knowledge. Systems change. New collateral options. We are hoping that eventually crops, livestock, receivables meaning money that people owe you, long-term buyer relationships, these things could act as collateral. Flexible loan payments. We are hoping that these are the solutions we are putting forward so that we can have greater improved access to credit. Seasonal repayment schedules. So instead of having a fixed payment and if you miss it, you penalize, understand and accept that informal income from agriculture, perhaps we need to adjust the way we collect repayments by allowing flexible repayment schedules and making it seasonal. Design credit for how rural women earn or women in agricultural businesses. Design the credit around them rather than ask them to comply to a norm that does not suit what they're doing. Recognize informal income. Approval should be based on transaction history. Or rather, I should say approvals are normally based on transaction history, but hard work should count as evidence, right? They should not have requirements for male guarantors or guarantors for what we would consider, I shouldn't say insignificant amount because it's significant enough that you'd want to borrow it, but certain amount should not require guarantors or find other means of guaranteeing loans. Staff should be trained to evaluate entrepreneurship and not work by their own biases and stereotypes. Women must be treated as primary economic drivers. Women don't need financial favors. They need systems that recognize their reality and reward their consistency. Women already contribute to the national food security, family stability, and economic growth. It's time financial structures evolve to support the very women who hold our societies together. Okay, let me see what time it is. Oh, sorry. So I will go through this funding. Why this guarantee program? Am I on the right page? Sorry. Okay, funding. So I just wanted to show you an example of a funding, and I took that off a Caribbean thing. So often we spoke about credit and how you go to the banks for credit and what's available and what you should do. So normally when we have funding, we normally think, oh, free money. So we all want to apply or go for it. But I just want you to see some of the pitfalls of some of the funding. Most women operate informally. We sell at the markets, the roadsides. And a lot of the time, the administrative costs and the time and registration becomes a barrier. So just quickly look at this funding thing. It says that the business must be formally registered. So basically that means incorporation. To incorporate a company can cost you anything from $1,000 to $3,000 EC, right? The annual revenue must not exceed 2 million. I mean, why can the annual revenue not exceed 50,000? Why does it have to be so high? The business must employ fewer than 50 people. The borrower must contribute 10%. How many people have 10% of the monies that they're asking for them to be able to get it, right? 10% and 25% equity. So these are the things that women are asked to put skin in the game, but many of us don't have the savings. Profits are often reinvested in food, school fees, and family care. The collateral requirement of 20 to 25% usually mean land, vehicles, or property. But typically, land is owned by the husbands, the fathers, the brothers, or family land. Women cannot use property that they don't legally own. So if you don't legally own it, just because you're farming doesn't mean you can use it. Joint ownership still results in bail approval. So even if you and your husband own a house, you would need your husband's approval to be able to take a loan, right? The fees. The fee of 1.5% payable upfront, that looks small, but for someone operating on thin margin, every cent counts. So women focus on employees. How many women have more than 2 employees? The program unintentionally formalize small to medium-sized businesses with offices, right? The real issue here is that the system was not designed with women in mind. So I just wanted to show an example of funding, right? Government policies and initiatives. So I had to put that in because you have to look at every angle. I'm not one who really believes in government. I believe in being the change I want to see. So my question to you is, or what can I do, right? So we must challenge the process that ignore our reality. Seasonal income, family responsibility, cash-based sales, limited collateral access. We must speak up to lenders, cooperatives, government agencies, and say, design financial products that reflect our women, right? And not a system that they expect us to be. When one woman pushes for better treatment, she opens the door for many. Collaborate with NGOs like Helen's Daughters. We are never alone. Organizations like Helen's Daughters and others across the region are really advocating training and providing financial pathways. We must partner with them, attend the workshops, apply for grants, use mentorships and training programs, join the conversations, right? Strength lies in community. When we collaborate, we negotiate better, and we are heard louder. Access to finance is not charity, it is a right. Rural women grow the food we eat, we stabilize the household, we power informal economies. But rights are only respected when they are demanded. This means writing to your credit union board, asking funders when the women-focused programs are, supporting each other's businesses, that's important, showing up where decisions are made. If we are contributing to the economy, then we must be recognized as economic leaders. We speak not for ourselves, but for our daughters, our nieces, our sisters, who will walk behind us. Change does not start in a ministry office. It starts here. It starts tonight with information, confident women who know their value and fight for their right for access to capital. This is not simply about getting a loan today. It's about rewriting the rules so that women can no longer be the exception. We should and are the standard. Okay, and I know I'm running through this because I really want to give you an opportunity to chat. So I hope Kiflin will afford me a little bit of time extra if you guys are willing to stay. I wanted to tell you all about this case that was only the judgment came out on the 27th of October. It's First Caribbean Bank. Any of you who's interested, I know I am a nerd. I find pleasure in very strange things, but this came up on my feed and I found it quite interesting. It was a case about guarantors. An elderly couple was used to, they guaranteed their children's business for $800,000, and the loan was used by their children's businesses, and they did not, the bank never sat with them and explained to them the risk of what they were doing. And then the bank came after them when the business fell through, and the court actually ruled that the bank failed to ensure that the couple hadn't understood the nature and the risk of the guarantees. And they did not ask them to seek independent advice. And on top of it, the parents were not beneficiaries of what they were guaranteeing. So the reason why I'm bringing this up is because of its implications on financial abuse and lending awareness. So we spoke about financial abuse and some ways Again, we had already established that financial abuse is disproportionate to women. So if, for instance, a partner or friend asks you to go and guarantee something for them, you put in yourself at risk. And the lending institutions must go beyond presenting the documents. They have a duty to ensure that you are consenting to what you know you are consenting for. Guarantors who are not benefiting from loans themselves, but simply backing someone else's venture, they need additional protections. So ask for independent legal advice. Understand exactly what is being guaranteed. Ensuring that they are not trapped, you are not trapped by family pressure or banking practices that assume consent. For the bank officers and institutions, the ruling signals risk is in proceeding without proper disclosure. So the reason I brought this up too is this ruling will have a lot of implications for things such as you signing agreements and the bank is rushing you to sign it and they don't give you a chance. Now, this ruling just came out. It was the High Court. I can almost guarantee you that they will take it to appeal because that is not acting in their interest, particularly around Caribbean women. So look out for what's going to happen in that instance. Where are we? Okay. Recommended resources. So I could not leave, and I have more resources that I will share with you all before today. There was so much more I wanted to talk to you all about, but I need to give you all some time to have a conversation with me too. Coursera. Some of you spend a lot of time on TikTok, on WhatsApp. If you can limit that and try and spend 20 minutes a day on any one of those I've just given you. I personally have done a lot of courses on Coursera on EDX. I did a hydroponics course. I've done courses on how to use Google, how to use Google Worksheets, things that have made me more efficient in my work. Most of these courses are free of very small fee. EDX has a lot of university courses. You can graduate with degrees. They were specially designed for people who could not afford courses. So I take a screenshot or picture of it now. The websites are below. Have a look and see if there's anything that interests you, particularly around finance, entrepreneurship, that might be able to help you in your daily life or your business. There's one slide I wanted to show you, and I think I missed it. Let me just go back. If not, I will speak to you about it next week. That was about some case studies in Uganda and in India. And I will talk to you about it next week when we meet, because I want to give you a chance. So next week, what time is it? Okay, next week, we are looking at setting up and running a successful business. This is, I think you're all going to learn a lot from it, particularly if you're interested in businesses and how you can do better. And I will speak up more about access to business and how you can get funding for business there. I had to move and condense this section because of the time. And the business taxes and regulations, we'll look at it, but the last week you'll have a longer opportunity to have a discussion with me as well. So questions and answers. I'm going to open the floor for question and answers. I will see if Kiflin can go until 1:15, which will give us some time to speak. I just want to remind you that financing is challenging. We all come from different backgrounds, so please be respectful, be supportive. Try not to go into a long triad of explaining, just get to your point, because everybody will want a chance to speak. So if we can respect that, I would appreciate that. Should you need to share any personal information, encourage you to do so in a private message. And let us use this opportunity again to learn, to support, to empower each other. And every question and insight shared, it enriches our collective understanding. But before we go to the question time, because I suspect we will think, I just want to say something. I have put my email address. I have received some emails from a good few people. I will respond to you on the weekend leading into next week. As you can appreciate, I have a few full-time jobs. What I want to say is that I am affording myself to you all to do that with you all, but please don't take advantage. I cannot call anybody, so do not send your numbers for me. I cannot WhatsApp you. I will be able to email you back and guide you as best as I can. Also, I am not there to give extensive financial advice because I have to work. So I completely, this is what I do in my free time. I don't have a problem even in 3 months if you message me to respond back to you, but just understand that the level of support you may need now, I may not be able to give it to you, but I'm happy to answer questions, give advice as best as I can, or point you out in the right direction. For the persons who emailed me about the insurance, I've already made contact with some of the insurance companies and they'll be expecting you to email them to ask them the information. So I will send that to you before the weekend, okay? So questions and answers now. The floor is open. Kiflin, you take over. Let me just have a glass of water. And thank you so much, everybody.
Sure. Thank you so much, Davy. I feel like the 2 hours went by very, very quickly. So while you have your water, just a few housekeeping rules. Ladies, I will only attend to those that are deemed as questions in the Q&A. There was some persons put in statements. If you just want to, just mention something briefly, you can use the webinar chat rather. And also, if you want to actually speak, you can use the raised hand function as well. So we have 4 questions in the chat currently, and then I will go to those who raised their hands. The first one, is it better to input money to the loan? I think we mentioned this. I think it has to do is going back to the question on putting
interest?
money. Yeah, whether it's to put it on principal. I feel like that's what it's related to.
Okay, so as we spoke earlier, yes, it's always better to repay your loan quicker, but don't trust the institutions to put it all on your principal. So you have to specifically ask for that and ask for a subsequent statement to make sure that they do that. But you can put it on, how shall I call that? Put it directly on your loan. That would definitely make a difference. Sorry.
The next question, should the banks take out the money for insurance from your salary automatically with the mortgage payments? That is now mandatory with some banks, but it makes it harder for persons to qualify for a mortgage loan.
Is that because sorry, I'm looking for something because I have one more thing to share with you all, the calculator. I'm doing that whilst I'm speaking. Does that mean, can the person quickly tell me if the insurance payment is coming out separately or is it amalgamated with the loan? Because most banks now include the insurance in the loan.
I'm not sure. I guess we'll wait to see if they can either type this or they'll raise their hands. And the final question, well, final 2 questions in the chat. Recently, I went to a bank to open an account for when I do farmers markets. Yay. The requirements was my ID, 2 utility bills, and a job letter. I had my ID, utility bill, but no job letter because I don't have a day job. Although I already have a joint account at this same bank, they denied me. Wow.
Okay, so if you want to share with me privately, because I have relationship with most of the banks concerning opening accounts, one, because I employ a few people and normally they are not full-time employees and I have to give them seasonal workers. I think if you're selling at one of Helen's Daughters market, it might be a case where Helen's Daughters may be able to provide you for a letter with your sales. And I can almost, if you have problems getting an account to open because of that, then I can help you with that. If it's, I don't know, if you're in St. Lucia, then yes, I can help you. If it's at St. Kitts and St. Vincent, probably not. So if the person who has that question is in St. Lucia, send me an email privately and I will see how I can help you with that.
She is in St. Lucia, Davy,
She's
and just to also add to that, just so you know, for those who do participate in the farmers market, we have done this numerous times, whether it's for banks or even for visa appointments and so forth, where we can do a letter for you stating that you are a member and mentioning your accrued produce sales, which is why it's so important to submit your sales after the farmers market. Also, ECCB has just established a new office for financial inclusion and oversight. And one of the biggest reasons they've done that is so that banking is accessible to all. I think pretty soon everybody, essentially a bank account will be almost like it's the basis has been that a bank account is now a human right. So what you would need essentially is your IDs to be able to open a bank account, not necessarily needing a job letter. So if you do want to report that particular bank, you can, because they have been informed about this as well. And of course, as Davy mentioned, you can email her also if you need assistance as well.
But Kiflin, she is actually right. And the reason being, she went to open a business bank account. Unfortunately, ECCB's requirement only thing for personal accounts, which is does not
She
make sense to me.
didn't specify. She just said an account, so I assumed it was a
On
regular.
account. Oh, I
Yeah.
thought she said I went to open, okay, for when I do the farmer's market. So which is why I drew that it was, she probably asked for a business account. Yeah, because she would, and then you would need to get a business name from company registry. But that, I don't know, maybe I'm wrong in inferring that from your argument. But if you told them it was for a business, that is why they would not, yeah, that is why they would not give it to you, because the account that they have, and I think I did bring that up when we had the conference at the conference in Soufre, that this thing was only for if you were opening a normal bank account, it would not apply to business.
Well, and she did mention that she's from HD, but unfortunately, people can mention many things, but the banks need documentation.
They need documentation,
So
yes.
it doesn't matter if you mention, they need a way to verify it. So ladies, again, you can email the office and we can provide you with those letters.
So Jacqueline Alexander wants me to be a business coach. Jacqueline, you think you can afford me? Just email me. I'm happy to help whatever I can, whenever I can, but I don't believe in selling that service. I have enough work. Our farmers who work full time.
Okay. As farmers who work full time, it is still difficult to get a loan to purchase farmland. I'm at the point where I'm tired. It got to the point the plot of land I wanted was sold to another farmer. This discourages farming on the island. How can I make this process easier? What can I do? Because my salary does not qualify me for a loan, but my partner does, and it is still difficult. Davy, if I can just put in a plug,
Sure.
they take a long time. But there are two agencies that do. If you are in St. Lucia,
St.
I'm
Lucia,
not
yeah.
sure. You can approach Invest St. Lucia if you do have an appropriate business plan, and also the Office of Crown Lands as well. Those two, well, Crown Lands leases land. It's long-term leases, and they are relatively inexpensive. And Invest St. Lucia actually has been doing land banks recently. I think there was one in the Boisjoli area, but that's for housing. But they do have agricultural land as well.
They have in Viewfort. They have in some areas in Viewfort. So if the person is there, I concur you approach Invest St. Lucia, but you can always email me too. And I know that it's discouraging, and maybe we can help find solutions and hopefully you've gotten something out of managing money and documentation, because it doesn't matter if you're making $20. If you haven't documented it, nobody's going to look at you to give you any form of entertain any form of lending. Okay. The template for budgeting, I have, like I said to you all, we only saw on Tuesday, and it seems like it's a whole week because I've been working a lot. So just bear with me. I promise I will put together all the templates and you guys will get them. And I want you all to get them so you can start them before Christmas. So I will try and get that to you by the weekend. What is the cutoff age for banks to offer loans? If you have money, there's no cutoff age for banks to give you loan. That's the irony of it. If you don't have money, then if you're taking a mortgage, normally a mortgage is 20 years and they want you to repay it by the time you're 65. So that would mean the cutoff age would be between 40 and 45. After you reach that, taking high value loans is probably unobtainable. Or you can't take it, the repayments will be a lot more and the interest rate will probably be high, and they'd ask for health insurance and life insurance and all these things. But there should really be no age for taking loans. And that is why, particularly if you're in a small cottage business, that microfinances or specialist lending for women should be able to help you. If you're 70 and you want to start a small business, I don't see why not you cannot have funding, okay? Anybody want, I wanted to show one thing, is the thing on the screen. So guys, I promise you all I would show you all the way the banks calculate. So this is an actual bank thing. I had to make sure I cut off the banks thing because I cannot even change it. So I will put in a figure. let's say $60,000. I will do two figures for you quickly. So I'll start off with a loan for $20,000, right? So the young lady earlier said personal loans are going at 12%. So you can see what the interest rate is. Let me see. Can you guys see, or you want me to increase it a little bit more? So if I increase it, you're not going to see the whole bottom of it. Let me see if I can increase it, if that makes a difference. No, it doesn't. Does it? Has it gotten bigger or not?
Slightly.
Sorry, guys. I want to change the interest rate for you. Can you all see what I'm doing?
Yes.
So I'm doing it at 12%, and I'm going to do a $20,000 loan, which is what the bank would do for 3 years, 12 months a year, right? So I just want to show you all. If you took a $20,000 loan for Christmas, I'm not sure what the interest rate is. I'm putting 12%. Your repayment would be $671, right? The principal would be $442, and the interest would be that amount. Can you see? And then there's an insurance component. For some reason, every loan is insured. As to what they're insured for, I still don't know, right? So you take a $20,000 loan and look at that. In 3 years, you'll be paying $7,000 in interest. Now, if you don't get to see that perspective, which I see it from the bank, when you take a loan, nobody thinks about how much interest they're paying. Do you know how much money that is? You're paying $7,000 to borrow $20,000 at 12% interest. But I just want to show you. So here, that column with all these dots, that would show if you repaid directly to the principal, right? So I'm going to put so the loan is $5,671. So I'm just going to put that every month. You're going to pay an extra $300 for the loan, right? Look at how much that cuts your interest by. But that's if you can afford 300. Let me go at least amount, because maybe most people are not going to be able to afford 300. Let's put $150. Bearing in mind that the interest was $7,000 before. So you pay $150 extra and your interest is down to $5,900. So you still end up paying the bank less if you paid an amount directly towards it. I'm going to try it for a larger amount. For those of you all with mortgages, I will do $350,000. I will do it at, I think that's 35,000. I will do it at, and this is an exact, that is the exact thing the bank would use. Exact. So a mortgage interest would be how much, guys? I'm not sure. Anybody can help me? Is it 6 or 7%? Let me see if anybody puts anything in the chat. No? 4.5. Okay. You work for the bank? To me, that seems like staff rate. Okay. I will put 5. Sorry, I don't know what happened there. Okay, so 5%. So a $350,000 mortgage, I just want to show you at 5%, 12 months for the year. And then that is going to be, how many years we put it for? Number of payments per year. No, it's not 3 years. We're going to pay that over, let's say 20 years. So over 20 years, 5%, $350,000, right? Can you guys see how much the interest is? Over 20 years. At 5%, $250,000. Isn't that not shocking? That you take a loan on over 20 years, you pay. Did I put something wrong? Number of payments per year, 12. Yeah. Okay, let's change that to, sorry guys, let's change that to December. First 20, no. Sorry, we change that to 01. We change that, Kiflin, bear with me, sorry. 26. And we'll put that to 2025. I think that's why the interest is showing so high. Sorry, guys. Nope. Something is not calculated. That's supposed to be 2025. And not 2021. 31st. Okay, no. I am not sure what I did wrong there. Okay, let me show you all if you all pay an extra $500 a month. See how much it cuts the interest by? I want to show you all that to illustrate that if you pay more on your principal, how much it can cut your interest by to half in the same 20 years. Okay? So anybody have any questions? Quickly, let me see what time is it. Okay, 5 more minutes. Tiflin, do you have any questions or not? More questions and answers? Somebody said 7%, 25 years. The bank is ripping us off for sure. Yeah, maybe the date is not in the correct format, but I just wanted to show you the gist of what it looks like. I can't get the date, but that was there already. So 1st of January is the repayment date. And let me change that to, yeah, December 1st, 2025. Yeah. So that's fine. That's how it is. Yeah. So 179 if you paid $500 more. If you didn't pay, that's what your thing would be. So you're paying twice the amount you pay over a period of time. Okay. So look at how much the principal is. So what the other concept I wanted to show you all is when you start paying a mortgage, you pay more towards the interest at the beginning and you pay less towards the principal. And as you go down, which is how they make their money. Okay. Okay, guys. So that is what I wanted to show you all. So I will take the last set of questions. I really hope that you all learned something from today. So anybody wants to talk to me for the last 5 minutes? Oh my God, Christine, you have so many questions in the box?
No, they're just, unfortunately, they use the Q&A, but it's just statements or like the interest rates. There was one person, Joycelyn, but then she put her hand down. So I'm not sure if she still wants
She
to
put
speak.
her hand down. Joycelyn, do
Yeah.
you want to talk to me or not? Because next week we have to move on to something else. And Kiflin is willing to stay these 5 minutes with me.
There was a question, but it's not really related to finance. Oh, here we go. Maureen Fontenelle, you can go ahead, Maureen. And then we'll have Judy Ann.
Hi there. Good evening, Davy.
Hi,
Good
Miss Fontenelle.
session, very enjoyable. I quite, it's riveting. Thank you so much. You were saying that there isn't a problem with, well, there is an age cap. Did you know that when it comes to applying for a loan for anything?
I didn't know that. I thought if you had money,
No.
no. If you have money, there's not an age cap. Trust me, because I know
If
people
you-
that way past the age cap and they get in loans. If you have a title and money, the age cap doesn't really count.
Well, I actually, it's my personal experience. I
Yeah.
turned 65, and for some reason, I went to the bank to get to apply for a car loan, only to be told that since I'm 65, I have to pay more than half of the deposit for the car.
Yeah.
And if whatever other loans that I was just asking questions. Well, whichever other loans that I need, I would have to pay more than half of the loan, despite the fact that I spoke to them on the phone. And when I went to the institution, that's exactly what I was told, that there is an age cap for 65. They do not give out loans.
Also, yeah, but yeah, I think earlier I mentioned that if there is a cap, somebody asked that there would be stipulations. The interest rate would be higher, the repayment would be more, and the time would be less. And they would definitely
Well,
ask for things like life insurance.
Oh yes, all of those things, I have it to mind. But what they wanted, and I also said that I have collateral, and I have 4 parcels that I want to use one parcel. They said no, I need to use all the 4 parcels as
Yeah, so
collateral.
I think I spoke about that before, but even one parcel, do you really want to give the bank one parcel and the car is worth a lot less than the one parcel? So you are better off selling a parcel, but I'm telling you now, you are better off selling a parcel and buying yourself a car for cash because there would be no interest associated. Why would you give the bank to hold something that's more valuable and you still paying them
Exactly.
interest? So
Yes,
that's where
that's what
you
I
have to come
said.
in, and the tools that I have just equipped you with is to take it and sell a parcel of land and buy yourself a car and take yourself on a holiday and
I
tell
have
the
since
bank.
bought the car. I have since bought the car, but the problem remains that if there's someone else who actually, they're not aware of the age cap, which is what
Mhm.
I find as a businesswoman who have enough collateral for anything, and yet
Mhm.
they're telling me that my age has gone against me. I was devastated to hear this, especially in St.
Yes, it
Lucia.
is. Yes, yes. But thank
Oh,
you,
okay.
Maureen. Thank you.
Thank
So who's
you.
the next
Sorry.
person? Yeah, that's okay. And you need to remember.
Maybe the next person would be Julianne, and then there's one question in the chat. I would ask the person in the chat though to specify where they're from because we are represented 3 countries. Let me look for Julianne. If you're still open, you can go ahead.
Live in St. Kitts and Nevis. I live in St. Kitts. But I don't have a question. I sent you a private email because I'm a process of buying and selling, and I just wanted
What's
to
your name? What's your name?
Judy Ann.
Julie what?
Judy Ann
Judy Ann.
Evelyn.
Cleveland.
Okay, yes. And I think, Judy Ann, you must have attended a session with me before because we had email prior to that.
Yes, and
Yes, in 2024, and I had emailed you. But that's fine. I'll get back to you, I promise, okay?
yes, but I would like to get a smaller packet because I'm getting ready to sign probably Monday.
I can't
and
hear
would like
you, eh?
I'm getting ready to probably sign Monday. And I want to know.
Okay. I will have a look at your email and I'll get back to you by the weekend, okay?
Okay, thanks.
All right then, no problem.
Okay, there's one more question.
No problem.
I'm not sure what country it's from. Is there any assistance for farmers in terms of land preparation and irrigation?
Again, I don't know of any personally. I know that if you're in St. Lucia, places like St. Lucia Development Bank, but again, the documentation requirements are quite heavy. So I am not sure the exact details about specific things for specific purposes. I am hoping that next week when we come to businesses, I can share some links with you all for places that offer grants and funding. But as it pertains to specific financing for specific things, I don't even really think that exists. I think those that they give without collateral are quite expensive and not always worth your while. So I want you to consider. I noticed somebody, I just want to answer 2 things from somebody. They said credit terrifies them if you can pay it. Credit is not always a bad thing. Don't let it terrify you. At some point in our lives, we all need credit, but if you are able to do without it, kudos to you. Share the methods with others how you're able to do it. They do not try to keep, yes. Kiflin is amazing. I do agree. Kiflin, somebody said you're amazing in the chat. I agree. Okay, and somebody
There
posted
was a
something that's not
question,
relevant. Yeah, what's the other
actually.
question?
The actual question is there an age limit for investing?
Absolutely not. There could never be an age. But if you are older and you're thinking about investing, this is why last week came in and said, listen, those of you who have not made a plan, put a plan in place to protect and to make sure that whatever investments and wealth and assets you've grown goes to who you want it to go to, right? Because, for instance, if you don't have a will, you don't have any children, the state can end up getting it, right? But it doesn't matter who you leave it for. You could leave it for the Marian home. You could leave it for Helen's daughters even. But make a plan so that you can protect your investments if you are older and you are thinking already, is there an age limit? There should not be an age limit for anything to do with financing. It should be about smart. Maureen spoke about at her age, she's not able to do certain things, but she has assets. So people tend to think that having land, and even the young lady who spoke about buying land and she wants to buy it. Sometimes if buying land is a stress, don't buy it. But look, you have land, land does not depreciate that quickly. Land does have value. Sell the land and invest in the things you want. It's probably going to cost you less. So these are the things I want you all to consider when making financial decisions. Why would you give the bank to hold 4 parcels of land for a vehicle that's $100,000 and your land is worth $1 million? According to Justin Trudeau, make it make sense. It just does not make sense. So if it doesn't make sense, it really doesn't make sense to do it. So that's my advice to you all on financing. And I really hope that You all learned something this evening. And I really enjoyed doing that presentation. That is one of the parts I'm really passionate about, and particularly around banking and how prohibitive some of the access to financing. And every day I work, I do something to be able to change that, not just for me and you, but for my daughters and my grandchildren potentially. So thank you so much, everybody. If there's no more questions, thank you for your patience. Thank you for your time. And those of you with businesses, I encourage you, and I'm excited about next week. And again, if you all want to help me and we want to have more time for discussion, if there is something you would like me to discuss or some questions you want about business that perhaps other people might benefit, send an email so I can include it in the presentation for next week. Okay? So you take care. Thanks again, everybody. Oh, I love the hearts and the thumbs up. Thank you. Thank you. Thank you, Kiflin, for your support and staying back late with me this evening. Thank you.
Absolutely. And thank you so much, Davy. This, again, every session with you is always just very enlightening. And ladies, as you mentioned, Davy, financial literacy is literally our freedom and our empowerment. So thank you once again for extending your time to us this evening. And thank you, ladies, for also showing up and showing out with all the questions and the comments. We appreciate you. And everyone have a blessed and safe night. Take care. Bye bye.